Well, I am Jaime Sastre, the CEO of Juniper Group. I came in CSI by selling the company that I founded in 2003. So I sold it in 2014 to CSI. I came as an entrepreneur who was going to earn an earnout by growing the company for the next 5 years. So that was in 2014, and since 2014 to 2019, I ran that company, I grew it. As well, I had the opportunity to get involved into a couple of acquisitions. So in 2020, I gave the opportunity to someone within Juniper, to Juan Mateos, to run Juniper and get myself fully dedicated to create a portfolio of companies and continue acquiring them. At that time, I already had acquired 2 companies. So we created what's today the Juniper Group. And in 2020, end of 2020, we started having our own M&A team and started acquiring companies. During all this time, what we had is created career opportunities for the people who were within Juniper and the other companies acquired. There are several different types of acquirers in the industry. There are private equities, there are strategic buyers, and then there is us. The main difference is the long-term goal and strategy. We are a buy and hold forever company, so that means that once a company is acquired by us, that's their final destination, that's a home for them, and it won't ever be sold. And the strategy we apply into those companies for growing them is quite different from the strategic buyers. Strategic buyers might look more into how they can benefit of their main company. Maybe if it's a large corporation, they might want to acquire a smaller company to make the large corporation larger. If it's a private equity, then it's completely different. The private equity normally tends to acquire a company, have it in the portfolio for 5 to 8 years, and then resell it. And they make their money into the difference between the price of acquisition and the selling price. In our case, we don't look at making a large company that we have larger, or we don't look at making money on flipping companies, on reselling them. What we look into is actually helping that medium company or small company to continue to be successful, to continue to preserve their values and their culture, but we give them a knowledge base that helps them to grow organically and also helps them to continue their legacy. Of course, we do synergies between larger companies, but the companies don't get absorbed into a large corporation. They continue to operate independently, and we look at those returns on investments individually per company. So we have a group of group leaders and integration managers, we call them, and those people onboard those companies, help them at the beginning to revise every metric and explain them what other companies are doing within the group to be more successful, to grow faster, to be more profitable, to keep an R&D team with less errors. So there's many of the integration metrics that we look at. And so the first year, I would say, is the year that you learn the most. But then we have events during all the year. Like we have the organic growth event, we have an R&D summit, we have a finance event, we have an M&A summit. So we have like 6 or 7 events every year, and majority of the presentations are our own, companies that have done something really well, and they explain it there for others to get excited about that and try the same thing. And also we have presentations on things that didn't go well, like a rewrite that went south. And so people can also learn from those failures and try to avoid them in their careers. But having said that, we don't stop anyone of doing anything. It just makes sense for us that they try things, but that they're aware of what works and what doesn't work. And since we're very results-oriented, I would say, every owner that now runs a company gets compensated based on the results, basically based on growth and profitability. So if they are engaged with what we do and they learn a lot, they will try things because it's in their own benefit and in their employees' benefit, because the more the company grows, the more opportunities their employees will have. What we do at the headquarters, and it's the same thing at the CSI level, is we kind of write the strategy for the next 5 to 10 years of how we're going to grow not the single business unit, but the whole portfolio or the whole CSI, but actually looking in which industries and which geographies we should invest and which kind of companies we should be acquiring. And we do that based on also soft skills. So not every company is a good fit. If there is a company that we like in terms of the product and the customers, but we don't like the management team, most likely we won't buy it, because we need to trust them for them to continue growing the companies. We don't have a group of general managers to send to the companies that we acquire. One part of the value that we acquire with the company is the people, it's those leaders. And so we decide the strategy and which companies to acquire, but we don't decide any of the small stuff into each of the business units. They are the ones that know the industry, they are the ones that know their clients, and we are the ones that know how to run software companies, and that's how we help them. So taking risks and going after larger opportunities is something that it's a lot easier within CSI than when you are an independent operator. When you're by yourself, if you fail, you're going to pay for that. And it might be even that you might go bankruptcy in your own company, right? You could become bankrupt if you fail big. Within CSI, it's different because, we're not going to sell the company, we're not going to close the company, we're going to be here even if something really big fails. Well, that's also, gives trust to the customers of the company, but also gives trust to the managers. What we want is to continue investing all the profits that we generate. And we have two ways of doing that. One is by acquiring companies, and the other one is by reinvesting those cash flows into the current business units. And we want those operators to take risks, even calculated risks, of course. But the upside of the calculated risk is normally much higher than if you are more conservative. Normally, and I can speak for myself, I was a lot more conservative with Juniper before I sold it than after. After I was, they were supportive that I did higher investments, that I put more into growing internationally, into hiring more salespeople. And this could have been, could have gone south if we hadn't sold more. But the upside of actually doing that and calculating it in a I would say not a sudden way, but actually doing it progressively, had given us great results. So CSI, I would say, wants you to, as a business unit manager, to take those risks and see if you can scale up the company faster. So as a growing organization, the only way we can continue growing is by giving career opportunities and having people taking care of what others were taking care of before. The larger you become, then the more roles there are within the organization. And so we've had people belonging to Juniper, coming into Juniper Group, being integration managers, being operations experts, or people who were VP of sales, becoming group leaders. So there is an evolution, and so people who want to grow within our organization can do that. Also, there is the possibility of switching companies. Some people that are in the group have gone to work for portfolio managers. Some people that worked at Vela level, which is our parent company, have come and work now into the M&A department for Juniper Group. There are opportunities to move from one place to another, and for sure we need those people wanting to grow their careers for us to become larger and larger. Because the more business units we have in our portfolio, the more talented people we need to continue helping them.